What's your next favorite report on here?
The one that honestly has become one of the most popular just because the data has been so strong recently in this current market environment is the initial balance. So pretty much for anyone who doesn't know, the initial balance is the high and the low of the first hour. So 9:30 to 10:30 Eastern time, whatever that range is, that is the initial balance. And what this report measures is how often does price break out to one side, which is this blue section. So only breaking out to the top or the bottom. How often does it break out of both sides, which you can see here is black one, which is only 12% of the time. And then how often does it not break out of either side, which is only 2% of the time in the last 6 months. So this 85% is such a strong bias for me, at least. If it breaks out of the high, I do not want to expect it to reverse back down and break the low, the IB low. And in this case, when you start to pair this with the opening candle continuation report, let's say the opening candle is green and price breaks out to the IB high. Now we have two reports that are very, very strong, north of 75%. This one is over 85%. Now we have a very strong confluence to be bullish today. So now being short starts to make less and less sense to me. I'm curious what you think about that.
I agree. And I take this to the next level. You might not know this, but on my charts, every day I show the initial balance both for the London Open and for the US Open. And sometimes there's confluence between the two, sometimes there's not. And when there is, then it's like, all right, that's a double dose of reality for me.
Exactly.
And that makes it strong. You do have a question, though, in the chat. Do the subreports include if price stayed above the break of the orb, IB, ETC?
So the way that this one works is we have a by close variant, and I'm going to go to it right now. So a subreport, just so everyone knows, is just a filter or a variant of the overall report. So we have an initial balance report, and we have all of these little subreports here. So if we go to the buy close, and now this is telling you, does price typically close above the IB high, within the IB range, or below the IB low? So this is considering every single initial balance. What I like to do, I like to go to my customization, and let's just pretend that today did break out to the top side. Right over here, this allows you to filter only for days that broke out to the top side. So if you click on that, breakout days, click save, give it a second, and then now you can see how often only on breakout days. So obviously, naturally, this has to be 0 because it didn't touch the IB low. 63% of the time, the price on the day will close above that IB high. And then only 36% of the time, it's closed within the IB range. So that helps you set the expectation. And specifically what this is pulling is that 4 p.m. close, that the regular trading hours, whatever session you have selected, if you have the London, it's the 11 a.m., the New York is 4 p.m. And then here you can see you want to expect some sort of continuation because 63% of the time it will close above that IB high. Now, it doesn't mean that it can't pull back in, but what you want to expect is that continuation to the top side. You don't want to expect it to just consolidate inside of the IB range for the most part. There obviously will be days where that happens, but for the most part, you should not expect that. And then you can also filter for the breakdown days. So let's just say price breaks to the downside of the IB today. You want to have an understanding of where it can close. Go to the breakdown, click save. And now you can see it's actually a little bit higher that it will close within the IB range, but 60% of the time it's going to close below that IB low. So even just taking a step back for a second, we mentioned before that 85% of the time, it's only going to break one side. Now we're telling you that it's going to break one side. So whether that's the top side or the bottom side, now we can go to the buy close variant of the buy close subreport and determine pretty much we wait for the first side to break. Now we can filter this to say, okay, it's broken out to the top side. 85% of the time, it's only going to break to the top side. And then now I can see that 60% of the time, or actually I need to change this, but 63% of the time, price is going to close above this level. And that gives me more confidence to have a bullish bias. Again, reinforcing that bullish bias, adding in these layers of confluence to not be on the wrong side of the trade. Does that make sense?
I'm totally following you. This is particularly good when you do have a kind of a big breakout one way or the other. A lot of times you have this retracement back, right? This reversion back. It's a mystery to me. Sometimes it's like, all right, are we going to retrace back into the initial balance or not? And so, this kind of stat, again, would help with that bias to kind of think it through.
For sure. And funny enough, we do have a report for that to tell you how far back into the IB price will typically go. Now it's called the buy retracement subreport. And I need to change some of these customizations quickly. What this report does, so we have it broken out by 2 separate days. We have it broken out only to the days that break to the top side over here, and then only days that break to the bottom side over here. So the one on the left is the bullish days. The one on the right are the bearish days. And you can see that right here, breakdown and breakout. And what this report does is it says after price breaks out, the first candle that breaks out to the top side of the IB, how far back into the IB will it go? And you can see this is the 25% retracement back into the range. Here's the 50% retracement back into the range. That's the midline of the initial bounce. And then the 75% retracement. So how do you use this as a trader? Once price breaks out, typically you don't want to buy the breakout because you know that 65% of the time it will retrace 25% back into the IB. What you're doing in this case would be limiting your drawdown, is entering further back in, expecting a continuation after that. Does that make sense?
Yeah, so you're waiting for the pullback that you expect to happen. Maybe it doesn't happen, but most likely it'll happen. And then you wait for that pullback, and then you end up with a better entry
Correct.
than you would have had on the initial breakout entry.
Exactly. Keep in mind that this is only looking at the breakout days. So this is not considering double break days. It's not considering no break days, obviously. And then what you'll notice is that if you look at the breakout days, those bullish days that you want to take advantage of, this black box here is the 50% retracement. Only 31% of the time on a breakout day, on a bullish day that we want to trade, has price retraced back down to that 50% without breaking the other side. Which means to me, and this is the way that I interpret it, people have different interpretations, but if price starts to cross back below that 50% line, I am not as interested in this trade anymore. This is a great area that starts to invalidate my bullish thesis. Because, and if you look at an even more extreme example here, is if you look at the 75% retracement, only 20% of the time of all of the breakout days has price retraced all the way back down and then bounced and then not touched that other side of the IB. So
yeah, and depending on your entry, for me, this gives me stop levels, right? All right, I'm wrong.
100%. That's the way that I use this. The intuition there is great because this is how, I never tell people how to use it. It's up to everyone's interpretation, but this is one of the ways that I use it. And I think that these two levels are great places to invalidate your trades and therefore a great area to put your stops. So your entry can be determined by the blue bar, and your stops can be determined by these black and gray bars. And then this is where you can start to have data-backed levels rather than an arbitrary R multiple. Rather than like just saying, hey, I want to risk $1,000 or I want to risk $500 or whatever it is, you can start to say, I'm going to use this data-backed level to put my stop behind and say, if price goes here, my idea is invalidated. I'm not going based on my account size. I'm not going based on the P&L drawdown. I'm going based off of where my trade idea is actually invalidated, which in my opinion is the way to place your stops as well as your targets.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.